The real estate market is absolutely going bust, but which one? There's a big difference, residential or commercial or both. Today, I'm going to be reacting and busting down a video from the Patrick Bet-David podcast where they were discussing about the downfall of commercial real estate and how that's going to affect the market, the economy, and everybody living in it. Let's get into it right now.
So there is a crisis that's about to happen. And so he's saying, you heard what he said? There'll be fewer bank failures. What do you mean fewer bank failures? That's like saying, hey, when the hurricane just passes by, there'll be less rain, but it's still raining. Yeah. So that's what's going on. Here's a number for you. $962 billion of commercial paper refinancing in the next 18 months ending around.
And see, guys, this is the whole thing is with commercial real estate, it's not locked in like residential where you get a 30-year mortgage. Don't worry about it. It's set and forget it, 30 years. Commercial mortgage in the U.S. is a lot like the residential mortgage industry in Canada where it comes up for renewal every 3 years, every 5 years. And what happened 4 years ago? Okay, the pandemic, a lot of people got cheap money. A lot of businesses specifically refinanced when rates were so low, refinanced their building. You know, Investors did the exact same. Businesses for their companies did the exact same. They refinanced their commercial real estate loans thinking, okay, well, this is pretty low. It's probably going to stay low because the government told us rates were going to stay low. Now, what's 1 year away? 2025. That's exactly 5 years from 2020. That's when a lot of these commercial mortgages are coming due. And a lot of these businesses and real estate investors who own these malls, who own these plazas, all this commercial real estate, downtown New York, etc., those loans are coming due. They're going to be refinanced at a way higher rate. They probably can't afford to pay it because the entire workforce industry has changed. If you haven't noticed, people are working from home. They don't need to go to the office anymore. So a lot of these investors are going to be holding the bag. The income's not coming in. Nobody's renting commercial space as much. Higher mortgage payments. They're going to default, give it back to the bank. Now, if they do so, commercial real estate is a huge portion of these banks' portfolio, which is what this podcast is talking about, what Patrick's talking about. If these investors, if these plazas, et cetera, these businesses can't afford to pay back the mortgages, they're just going to give the keys back 2008 style. And the bank's going to be like, what the hell? What am I going to do with this? Try and sell it. Nobody's buying commercial real estate either. So it's just going to be a huge loss. And this is the paper loss that they're talking about on the balance books of these banks with these assets that aren't doing well. There's less people renting them, less businesses renting them. And if they do have to sell it, it ain't going to sell as easy. So it ain't looking pretty.
Quarter next year. So actually, we're coming up on a year.
12 months, yeah.
Yeah, it's 12 months out. I was thinking since the beginning of this year. $962 billion.
Nah.
Now, if the rates go down, that way they could refund. Oh, wait a minute. The Fed just said the rates will be higher longer.
Getting warm.
So there may be fewer.
Well, the Fed says higher for longer. We know that. Never in history, ever, in recent modern history, have banks held rates truly for a long time when they've gone up a considerable amount. This would be definitely considered a considerable amount. Maybe this time it's wrong. Maybe they're going to hold rates until December. Maybe they're going to hold rates until January, February. It's not looking so. A lot of economists are predicting they're going to be cutting in September, which is not higher for too long. And most importantly, when they do start cutting, they're going to start slashing, which I'll be straight up. Patrick Bet-David, PBD man, investor, business owner. I look up to him. I learn a lot from him. But let's be real. He's been pretty wrong about residential real estate anyway in America. A year ago, he was saying we're doomed. 2008 for sure. When these rates go this high, for sure, it's going to be a crash. Prices are going to come way down 30, 40, 50%. And that's not the case in most areas, quality areas of the U.S. Real estate has only come down about 20, not even 15% in America. Canada has been hit a lot harder. But, a lot of people didn't anticipate the resiliency of the real estate market. So can't blame him too much. PBD is right about most things, but he was quite wrong about that. Is he right about commercial real estate? We're going to find out.
Failures, but there's going to be bank failures. There's going to be commercial real estate that goes into receivership, and this isn't going to be like 1928 and the Great Depression, but you're going to see a ton of this stuff, and the big private equity firms and Jamie Dimon are ready for it because their balance sheets are ready to pounce.
And it's interesting that they use the term, they're not going to be insolvent, they're just stressed.
Jamie Dimon,
so
baby.
If you ever go to a
buy
doctor,
up all the deals.
they're going to do something called a stress test on you. They do the same thing for banks. Basically, how much money, how much cash reserves do you have in the house? Basically, the FDIC, what is it, $250,000 if you, anything above that. So I remember when you interviewed your buddy, your good buddy from WAMU.
The best interview ever.
Oh,
Yes.
The
This
CEO
guy-
actually enjoyed it.
Yeah.
He was upset. I was happy about it.
So we've seen
His,
this.
his wife was screaming in the
Yeah,
hallway.
so, I mean, what do you expect? But they couldn't pass the stress test. I think they lost, what, $300 billion?
They went from being a
Yeah.
$330 billion company, WAMU, to Chase buying them for $1.9 billion.
Yeah.
Now, guys, by the way, a stress test is pretty new to the U.S. You won't see that in residential real estate in the U.S. In Canada, we have that. We're more of a commercial type lending. In Canada, everybody who buys a house just like this, you must do a stress test. You must pay or qualify, for a rate that's 2% higher than the actual rate, just in case rates go up. Now, rates right now are at the highest they've ever been in 40 years. They're not going up anymore, okay? Canada or America, get over it. They're not going up anymore. But you still have to qualify for 2% more than the rates right now. Dude, that's why a lot of people aren't qualifying for homes in Canada. But same kind of deals going on right now in the US for commercial, which is smart. It's more business, it's more savvy, it's more capitalistic. Banks want to look out for themselves. So a stress test is definitely newer concept, or just a not talked about concept as much in the US, but it is there to protect the industry from a potential crazy rate increase like we're seeing right now.
That was the biggest bank failure, and that was obviously in 2008 because it was all tied to the mortgage. What was the term that they used for mortgage? Well, no income, no assets, but the toxic mortgage.
Also, mark to market. The value of the assets dropped, and so
those are called stripper mortgages. You got those in 2008. Strippers were buying houses like crazy. No assets, no mortgages. They got the money.
But that was the biggest bank failure in American history. But all the other biggest bank failures we've ever seen in American history were in the last 12 months. Signature Bank, First Republic, Silicon Valley. I think First Republic had $200 billion insolvent. Silicon Valley, another $200 billion. Signature Bank, $100 billion. Yeah, these banks better be ready to pass the stress test. The first time it was tied to mortgages, now it's tied to interest rates, correct?
and big commercial property.
Yep.
Yeah, he who has cash right now is in a nice place. He who has cash, he can buy a lot of things for a discount, especially now that inflation is not going lower. Mm-hmm. And by the way, Tom, if all of a sudden unemployment rates climb, just so everybody knows, this is the one thing that Jerome Powell is not going to know how to control. Can you go up to the unemployment rates right now, Rob? Just pull up unemployment rates in the States.
Yeah, well, they pulled this up. Like, this is exactly what we're doing in America right now. You know, we were buying flips in Canada, doing great. Now we're going down to the U.S. because the market is way better. But we have cash. We have investors. We have private lenders investing with us. And we're getting smoking deals. We just got another deal today. We're getting 2 deals a week, it seems like, in Florida, in Texas, in all these great states because the tide is changing. There's more fear out there. People are losing their jobs. I'm sure he's going to touch on the unemployment numbers in a sec. People are starting to feel that pinch. That little bit of remnants of 2008 is starting to come back again. People are pulling back on the spending. Unemployment rates going up. Jobs are less and far few between to find. And because of that, we're noticing even in our business, talking to sellers, there's more motivation. There's more fear going on to buy these properties at a massive discount, which is great. So if you're an investor right now and you're trying to build a business, you're trying to get these great deals from motivated sellers, okay, it's just friggin' beginning. Just beginning.
Unemployment right now is what?
3.5%.
Is it 3.8%?
4.
Find a chart for me. Find a chart.
Yeah, so right there, 3.8%.
Creeping back
right?
up is the bad thing.
Yeah, that's the thing. By the way, if that thing, you see, it's not staying flat. It's kind of going up a little bit, right?
Yeah.
If that thing, Vinny, goes to 4%, 4.5%, if it goes to 4.5%, if it touches 5%, again, the key word is if. We can put another short.
Allegedly.
But allegedly, if it touches 4.5%,
Yeah.
What happens?
you know what happens?
What?
And actually announce rate increase of
Yeah.
a quarter of a basis point to a half a point. Yes or no?
Correct.
Absolutely.
Yes.
If that thing touches 4.5%,
And like let's just say Pat, in the next couple of years, especially with AI taking over, and a lot of these people are going to be jobless, that is going to start going up. That's the biggest fear.
Allegedly. But
I'm just saying it is going to happen.
The
People are
number
losing
that
jobs.
they want to keep it under is 5%, correct? But
it's
if it
creeping.
goes to 4, 4.5,
Not 4. I don't think it happens at 4. I
5.
think at 4, look, it's only 0.2 away, right?
yeah,
It goes
no,
to 4.
5 is the number that
I
they're
think
trying to keep this bad
4.5
boy
is
under.
the number. I think if it goes to 4.5, Jerome Powell's going to take a.
Pat, I'm itching for a bet. I'm itching for a bet
And
because
by-
you're going to lose money to me. You're going to lose money to me.
And
Do
by
you
the
think
way-
it gets to 5?
No.
Okay.
I don't
I was
think
gonna- I was
so.
gonna-
By when?
I
By
was
the
going
end
to
of the
take the
year?
under
No,
by
no.
the election.
Oh no.
No.
And by the way, let's keep in mind.
No.
Just itching for a bet, guys.
No, I'm just saying AI. I'm just saying AI is going to take a little while, but it's like you said.
You're right.
It's starting to creep
You're
up.
right. You're right.
Because what are those people going to? And then think about what's going to happen to society when all those people start losing jobs and they have no money.
Yeah.
Go think about that.
They're losing jobs now. The numbers behind the numbers on labor is scary. Q4, the net increase in jobs was part-time jobs. More full-time jobs were lost in Q4 than were created. It was a
Wow.
net decrease. The net jobs report in Q4 was part-time jobs. The net job increase in
Lots of public jobs created, private jobs
Q1
lost,
was
just like
part-time
Canada.
jobs. We have lost more full-time jobs than we've created going back to August of last year. So there is a shift that's going on in the labor base underneath, and that is the dirty little secret behind these jobs reports, which are politically driven. But the Fed, in all their footnotes, FRED, Federal Reserve Economic Data that comes out of St. Louis, they're putting it in the footnotes. It's there in the footnotes, but none of the mainstream media is talking about it. We're losing full-time jobs and replacing it with part-time jobs. McDonald's, as we said on the last podcast, had a tough earnings report and then warned everybody. And by the way, the full impact of $20 minimum wage in select market is going to hit me hard in Q2.
Tom, what was the Fred thing?
This is the thing. When you pay people more minimum wage, the business passes it on to customers. Prices go up. Less customers buy. Earnings go down. McDonald's, Starbucks, Costco, Walmart, all great earnings reports to watch and keep track on because they're a leading indicator. Okay, if customers are spending less or more, it's a sign of what's going on in the economy. If more people are shopping at Walmart rather than Abercrombie and Fitch or some company like that, okay, people are pulling back. They're being tighter with their budgeting. People are spending less at Walmart and they're spending more at all these fancy stores. Okay, it's boom time, baby. But we're seeing more people spend at Walmart, more people going to eat at McDonald's, even though they're complaining about rising prices.
Data out of St. Louis, you can just look it up. It's called Fred. You go Fred data. And
Tom, let me tell you something. You're like Right Said Fred. Your stats are too sexy.
this is it. This is Fred. It's a public website by our federal government.
Yep.
And you would think that they would be hiding in it, but the
sexy
footnotes are clear.
All right, guys. So what do you think? Let me know in the comments below. If commercial real estate starts to crack, if businesses can't afford to pay the mortgages and the banks are forced to take these giant commercial buildings back where there's less people working in anyway, what's going to happen to the commercial real estate market? Most importantly, most people watching this, what's going to happen to the economy as a whole? What's going to happen to the residential real estate market, which is what we care about most? That's what you probably care about most. What do you think is going to happen between now and the election, between most likely Donald Trump, Joe Biden? What's going to happen with the economy? What's going to happen with the unemployment rate? What's going to happen with jobs numbers? What's going to happen to everything? I want to hear your thoughts, comments below. Let me know what I hit, what I didn't hit, what videos you want to see next. I will see you in the next video.